So the Keltner pullbacks. So these are kind of the ones that you'll see most often. So when we're in like bullish markets, you know, the SPX, and I can kind of show you. Let's just pull this up so we can explain quickly. I'll pull up an SPX chart. So the indices, they don't go into state 8 much. You know, they're mostly 1, 2. Obviously right now 1, 2. So this was back in, you know, when the global pandemic hit. You see that was pretty much straight down. But other than, for most of the time, and this is at when they were raising rates. So there's always, you know, something on the horizon, but typically, you know, you're doing those 1, 2, 1, 2. So these are, you know, when we show you these trades, that's what we're looking for is these good entry points, you know, little pullbacks, you know, breakouts, things like that. And then, you know, we try and catch the bottoms too down here. So, you know, the very bullish stocks are going to be doing this. And, you know, you pull up, you know, all the different types of bullish ones, you know, like Amazon, Google, things, you know, a lot of these are just doing 1, 2s, 1, 2s. So, you know, we just figure those 2s are great entry points. And, you know, a normal market, when things get crazy, obviously, you know, you have to be aware. But in, you know, typical markets, all these 1, 2s, you know, these are all, you know, and sometimes you got the 4 there, but these are the entry points that the system automatically will identify for you. And you can see here a lot of the, like the modeling is, you know, it's not going to miss this, you know, these large sustained moves upward. You know, you may get some of this chop, but it's not going to do this type of move unless it's in state 1. You know, and it's on the downside too, it's not going to do sustained, you know, downward movement unless it's in state 8. So I just kind of want to clarify that. You know, obviously we had all these 1, 2s, you know, everyone's saying the market's tanking and it's just bouncing off. You know, if we look back here in October, and you can go back to our meeting replays. But you see, you know, it's in state 2, went in 921, went right down there, pretty much was target 3206. So it was $3 away from that target 3. But you can see it just bounced right off of that. So that's what we're looking for, you know, with all these symbols. So hopefully that clarified stuff a little bit. So back to the pullbacks. So this one, you know, state 2, target 2 met. So it doesn't have to hit the aggressive target. But what I guess I will show you this too. So the typical move when it goes into state 2 is a drop at 2%. So you can see the targets here. The aggressive target is more than the average move. So the average move will be right between 2 and 3. So when it hits 2, that's why, you know, we have different signals in here. So we're looking for target 2 with 1, you know, target 3 in a different study. But on average, when it comes into state 2, you know, SPX will drop around 2%. So it'll hit that target 2 and then, you know, reverse. Because you can see down here, you know, 65% of the time, it's going to go back up. So if we lay in, you know, different indicators, you know, we can increase that percentage of picking, you know, when it is an actual bounce and when it's not a bounce. Okay. Okay, so here's our signals. Obviously, we're using it 2 ATR 20 days and state 2 target 2 minute. We've explained these. Okay, so 6/11 of this year, Bristol Myers Squibb went in and obviously hit its state 2 target and crossed below the Keltner. So we can see, high probability wise, this is for a long call. Out of 6, at 83% win rate. So it's making money, not a huge profit factor. Obviously, if you're bullish on the symbol, maybe you want to take that trade. So here's where, cross below. Obviously, it's within that channel. Anytime it crosses below those those channels or up above, that's kind of like an indicator to us that, something's going on. A lot of times it's going to stay back within those bands, revert back into it, reversion to the mean. So this entered into state 2 the previous day. Obviously had a big drop down, and it had to meet that target too. It met actually all of them in that same day, one day after going in. So here's our entry right here. You can see that big drop below, continue down and then, start creeping back up. So our long call, we got in 6 and then it closed out 7.6. So like right in here, this price, we can look at there, but, it's obviously like around $5 move or something. So, the other good thing, you can analyze, down into the details, all the different Greeks. We also have graphs that you can, shows you good daily profit loss and things when you do back testing on these. Okay, so the bull call, let's see, closed out the same day. So, you look at the difference here, 200, and now you're doing 400. You made about half. So it's pretty much a wash on which one you did. You're making about half. So obviously, we've talked in depth about which strategy suits you. And, if you're not sure, we do have a virtual portfolio where you can paper trade all of these. When you go into the, open up those daily studies, there's the button over to the right that I can show you. Where you can add them into a virtual portfolio and track these trades. Let me come back to current day. So when you come in here, you can open up, it tells you the exact strikes and expirations, previous close. And you can go over, you can live trade it, or you can add it to your virtual portfolio. So you can create, as many virtual portfolios that you want. You can track, whatever you want in those. It's still end-of-day data for those, but it'll give you, a good idea of how things perform, and you can always say, and nothing's really a substitute for live trading, but, it will give you some confidence in the strategies as you implement them. Okay. And then the bull put. So it closed out. Typically, these will close out the last, be the last ones to close out. but not always. Okay, so long calls for the Keltner pullbacks. This is since January. Obviously, a nice graph here. 76% win rate, which pretty much matches historically how it did. You're not, these are obviously lower risk. Same thing with the days in trade. It's kind of deceiving that it's saying 23 just because you'll have some that'll, most of them will be within a few weeks, if you're going to get the winners. But, the way it's tested is there's no stops on this. So if you have a 90-day option, it's going to just hold that till expiration. So it really drives up, the average days number. But, making $3 a day on this, pretty strong. Bull call, so we go from 76% up to 82 for the bull calls. Make more per day, obviously a lot more, but you're risking more. But the profit factor, I guess that's one thing we haven't discussed. So the profit factor is something like institutions use, and what it is the total profits of the trade divided by the total losses. So as long as it's above 1, it's a profitable trade. If it's below 1, then you're losing money on the trade. So the higher the profit factor, the better, obviously. And then, the bull puts, so these are typically the highest win rates, but susceptible. Anyone that's, done any kind of, naked put or bull put strategy over time, that's the only thing you have to really worry about, when getting whacked, where the market turns quickly and, your lower, your standard deviation naked put, is it's in the money, then you're in trouble. So, so that's the only thing you have to be really, careful with those, the bull call and the bull put. It's just overall market direction. And we do some each week, in our normal weekly meetings, we'll go through and do market analysis. And I think people are pretty happy with what we tell them as far as, market direction, things like that. So, and we always give warnings when things are going to get choppy, as far as that we can see. And I think we've been pretty accurate on that. Okay. Any questions?
I didn't see any questions come over, Josh. But
okay.
I did want to mention something though, back to like the long call where, you're in the trade for 23 days on average. And you were talking about, the long calls, we hold those until, the stop loss, there isn't a stop loss, 100% loss, or till the options expire.
Yeah.
But one side note is that in the platform, we didn't do it with the studies, and members can do it on their own, but you can back test using a parameter to get out of a trade at a certain time. So if the system knows the option might expire in, let's say, 20 days, and that you only want to hold it until 15 days until expiration, you can put that into your trade parameters and test that as well. So if you want to get out of options prior to a big amount of time decay, you can test that also as well. So just wanted to kind of make that as a side note.
Hey, yeah, I think it'll be a good idea. You want to show them that after mine, give them a break between these different studies.
Yeah.
You can show, just pull up today's and like go through and, show them how they can change the parameters on like a bull call. And,
yeah, sure.
In the fields. I mean, it's pretty quick, and I think it'll, break up, just rifling through 11 different strategies. At least show them, break it up a little bit.
Yeah, we can do that. And then also you had someone just asked, how can they join the weekly meeting that you talked about?
Yeah, just send me an email, and I'll put my email in the chat right now. Okay, yeah, just send me an email. I put my email in there. It's joshua@delphiantrading.com. So, and I'll add you to the list. You know, and we have all the replays, so you can go back and, you know, sometimes we cover things quickly and you have to go through them again, or people can't attend. So we've been recording those for the past few months. So in addition, this will be recorded and available within a few days on our YouTube channel. And let me just show them that real quick. Okay, so obviously you can go in the videos. The playlist is where, I don't know why that's there. We have the weekly meetings here. That's our last earnings webinar. So if you're interested in earnings webinar, you know, earnings trades, we have great earnings trades. So, and we talk about those pretty much every week at our weekly meeting. But if you go in here, obviously you can just, no, Sean. So we have, you know, we started recording these, you know, because people wanted playbacks on them. So, you know, we got since August, so you can, they run about 2 hours. So those are there, feel free. Okay. All right, I think I only got one more. Am I going too fast?
No, it seems good to me.
Okay. Okay.